We are now getting new information that the conflict in the Middle East could be escalating. Iran is saying that they might put mines in the Strait of Hormuz, which would close oil completely off in that region. We're going to go through the latest updates. We heard from the White House. We heard from President Trump. Crypto was up a bit today, so was some of the stock market. I want to go through all of the news so you are completely up to date. Let's go through it one by one. Here we go. So, midday here, 5 a.m. my time is midday here in the Eastern time zone. This video will come out just in a few hours. Massive reversal in the market in the last 60 minutes. We saw the S&P up 580 billion. The Nasdaq was up 430 billion. The Dow was up 260 billion. Russell 2000 was up 60 billion. And Bitcoin was up 50 billion by itself. Just to round out the day here, we saw S&P up 6. Nasdaq was up 0.5 to 6. Dow Jones up 0.4. And the Russell 2000 up 1 to 1.1%. And so I want to jump here. It does look like insiders are dumping stocks and equities here as retail is coming in. There was some information from the White House and Trump that the conflict is now over and the US would be, we got our mission done here. We'll be pulling back. And this is what sent oil prices crashing, as well as stock market is going up. But if you take a look at what the institutional players are doing, they are getting out of the market right now, at least cutting down some of their positions, de-risking, if that's the right word. You also saw here from bar chart, there is a 0% chance that the Fed is going to cut rates in the next meeting. Now, Iranian officials have ruled out any plans of a ceasefire or negotiations with Israel and the United States. The statement comes as Israel's Prime Minister Netanyahu says that they are not done yet. U.S. Defense Secretary Hegseth said that it would be the most intense day of strikes inside of Iran. And the UAE's largest oil refinery, Ruwais, has shut down after a drone attack. Saudi Arabia, the UAE, Kuwait, and Iraq have cut production of about 6.7 million barrels per day. U.S. oil prices have rebounded to about $90 per barrel. Now, this is about 6.7% of global supply here. That is a big deal. And we know that even if you stopped what's going on today, getting this infrastructure back up and running at full capacity could take weeks to months at this point. And as more key infrastructure gets hit here, it's going to put more pressure and strain on the overall, industry, as well as, South Korea, Japan, Taiwan, the countries that rely on the Strait of the Hormuz to keep their economies running. We did understand that there's about 1.2 billion barrels left in the reserves for the G7 countries. There was some comments about releasing 400 million barrels if something were to happen here and they needed to do that. That would only buy them about 20 days if they did. We got that yesterday. Iran's foreign minister says that U.S. officials are posting fake news to manipulate markets here. It won't protect them from inflationary here they imposed on Americans. Markets are facing the biggest shortfall in history. This is why I've been telling people don't just FOBO into markets. Take a second to understand what's happening here. You might see green today, but where we're going weeks from here, this isn't looking good. This conflict is not going to be over. And now we are seeing reports from U.S. intelligence that Iran is mining the Strait of Hormuz. If that's true, this is a huge escalation. Sea mines do not discriminate in any way. They are not a drone. So, they wouldn't be directed at a specific ship. If you get close to it, it will blow up until the USA goes in and removes the mines. The strait will be closed. Saudi Arabia is ramping up exports via its pipelines, which could be a massive offset factor. Not solve the problem, but ease pressure a little bit. Now, the reason this is bad, U.S. intelligence sees Iran taking steps to deploy sea mines in the Strait of Hormuz. Here's why. The Strait of Hormuz is about 21 miles wide, but at its narrowest point. It sounds big, but there's only actually 2 miles that are actually used for shipping traffic. That's it, right? 2 miles. I didn't know that. And so I'm learning this bit by bit as we go. Iran has estimated 5,000 to 6,000 naval mines in a stockpile right now. They don't need all of them. A few hundred dropped in those 2 miles would change everything. A mine doesn't need to explode to cause chaos the moment they are deployed in the water. Take tanker insurance rates spike, ships reroute, shipments halt, and 20% of the world's oil supply will get choked off before a single vessel is hit. That's the playbook. You don't need to shut down the strait. You just need to make it expensive and terrifying to use. Panic does the rest. Now, President Trump did comment on this point. Exactly. That way, we know it's actually happening. If Iran has put out any mines in the Hormuz Strait, and we have no reports of them doing so, we want them removed immediately. For if for any reason mines were placed, and they are not removed forth, with the military consequences to Iran will be at a level never seen before. If, on the other hand, they remove what they have been placed, it'll be a giant step in the right direction. So he's confirming here that Iran has put some mines in the Strait of Hormuz, right? If you read this comment, it does look like that is happening. And Trump also said that I am pleased to report that within the last few hours they have hit and completely destroyed 10 inactive mine-laying boats or ships. So you know this is on his mind, because he's now making multiple posts about it, with this news of now Iran deploying mines. Oil did spike up 13% here. It was cooling off in the high 7s. Now it's back right below $90 per barrel. You also had some reports that U.S. warships were escorting oil tankers through the Strait of Hormuz. That has been now denied by the White House. Listen closely. Yes, I was made aware of this post. I haven't had a chance to talk to the Energy Secretary about it directly. However, I know the post was taken down pretty quickly, and I can confirm that the U.S. Navy has not escorted a tanker or a vessel at this time. Though, of course, that's an option the President has said he will absolutely utilize if and when necessary at the appropriate time. So we are still completely shut down, and with the, with mines now being a real possibility, this is not going to be over anytime soon. The G7 countries, this was yesterday's news, were trying to buy some time here. They were considering releasing 400 million barrels of oil as prices were skyrocketing. Now, I did some follow-up on this. Multiple reports confirm G7 finance ministers and the IAE members are weighing a coordinated release of around 300 to 400 million barrels. However, key outlets report that it's a broad agreement not to release reserves just yet, with the option kept in reserve for if the crisis were to worsen. Also, they're talking, the reason that they were talking about this is when oil was getting to $115 to $120 per barrel. Comments from the president is that the war has been very complete and could end very soon. And this is why prices, started to tank for oil, because people thought that whatever's going on in the Middle East with the US, Iran, and Israel is coming to a close. But now, if you take a look at the recent news, that might not be the situation. And so, this 1.22 billion barrels of oil, that's 60-day supply for the whole world, right? And so if you release 1/3 of that, that's a 20-day supply. That only buys you 3 weeks. And after that 3 weeks is done, you have to keep going into your reserves. If you go through all of the reserves, it could be an oil crisis that the world has not seen, at least in my lifetime. Now, a record number of 39.3 million barrels of sanctioned crude oil are sitting in tankers off the China coast. The stockpile includes 30.2 million barrels from Iran, 5.6 million from Venezuela, and 3.5 million from Russia. This is up 454% from October, and 17% from levels seen prior to the Iran war. 77% of crude is Iranian, but fresh offers have declined due to the ongoing war. Furthermore, 66% of the tankers are anchored in the Yellow Sea, with the rest in the South China Sea, indicating that most of the supply is parked close to China's major refining hubs. This floating stockpile acts as a buffer for China's private refineries, known as teapots, who have traditionally been the biggest buyers of discontinued Iranian crude. Now, all of these infrastructure, these ships are parked. They're not moving. They're not dropping the oil off. They're not resupplying. And so this whole infrastructure is now stopped. That is the headline to take from what I just said. Now, Bitcoin does reclaim the $70,000 mark. And we are seeing Bitcoin, Ethereum, XRP. We're having some money now flowing into the crypto market as traditional investors that are investing in Asia markets and all of the markets around the world, as those have been losing money drastically. Billions of dollars over the last few days, since the crisis here has started. People have been looking for a little bit of safety in Bitcoin, in Ethereum, in XRP. Let me play it. Mitigating volatility in a portfolio means a lot, because you can get 8% a year with low volatility. Actually, you'll compound to more than 10% with lots of volatility. So having diversified assets means a lot. And so far in this conflict, actually, if you look at Bitcoin, it's up a little bit and equities are down. So the diversifying piece, I think, still stays intact as an important theme here. And that's what I think is important to focus on. So many folks have concluded that cryptocurrencies, Bitcoin, Ether, Solana, XRP, that they're just risk assets. But if you really run the numbers, you can see that not only do they have de minimis correlation with equities, but they also have extremely low correlation with gold and silver, as an example. So I think the diversification story really holds in this current environment. Mitigating. Few other things I want to show you here. We do have a U.S. The U.S. is headed for a serious recession next year, warns a veteran Wall Street strategist David Rosenberg. A little bit more information here. David Rosenberg has been arguing that headline GDP looks better than the underlying economy because of several key areas that are already weak: housing, old economy, capital spending, parts and consumer spending, and small business employment. And most of the reason GDP looks good is because all of the money that's being spent on AI. The issue here is, as you spend more money on AI and data centers, that replaces more of your workforce. And so a few select people, these billionaires, are putting more into AI that is replacing their workers. And so this is benefiting the people at the top when it's really hurting the people in the middle. And of course, people that are trying to fight to become the middle. And so this could be a real big issue as the U.S. economy moves forward, and as oil is still a big issue here globally. Cost pressures across the U.S. businesses are accelerating. U.S. manufacturers reported a total operating cost jumped about 8.5% in 2025, nearly double the 5% rise the prior year. At the same time, service firms saw costs rise 7%, also accelerating from 5% in 2024. Employee health insurance was the biggest driver, surging 14% for manufacturers and 12.9% for service firms. Utilities cost rose 8.5% for both sectors, and 20% for firms reporting increases of 20% or more, all while businesses' insurance jumped 7.4% for manufacturers and 6.8% for service firms last year, with nearly 1 in 10 companies reporting spikes of the last 20%, or at least 20%. U.S. manufacturing unemployment continues to shrink. The manufacturing sector lost another 12,000 jobs in February to 12.57 million, the lowest level since January 2022. Employment in the sector has now contracted at 23 out of the last 25 months, the longest losing streak since the last financial crisis. This is why you're getting, more and more headlines like this, because people are looking at the underlying data here. During that time, manufacturing jobs have declined 302,000. By comparison, in 2000 to 2004, the streak lasted 43 months. Meanwhile, surging energy prices amid the Middle East war are expected to add even more pressure, as the higher energy costs may force factories to cut even more jobs. This is a vicious cycle here. Where we are right now is very uncertain. The headlines are saying, "Oh, the job's almost done. Everything is going to go back to normal here." But if you look at how much infrastructure is currently being destroyed, it could take months or years to rebuild it and get us up to full capacity. The markets aren't yet really pricing in, and people are doubling down on cheaper prices in the stock market, only to realize that markets could go down even more once people realize that this issue that we are having in the Middle East could go on for weeks or months. There has been comments about putting boots on the ground, and we know that could be a very catastrophic piece that would make this last even longer. And so, just to recap here, markets did recover some with the news that the war might be ending. We got insiders now rapidly de-risking out of the stock market and other institutional markets. We have a 0% chance of a rate cut now, because inflation is rising, because oil prices are rising, and unemployment is also rising. We have Iran saying that there will be no ceasefire, even though Israel and the US are trying to push for that. You have the Prime Minister of Israel saying that they're not done yet. You have the US Defense Secretary saying that today is going to be the most intense day in Iran for bombings. You have the UAE's largest oil refactory going offline to a drone attack. And now you have 6.7 million barrels of oil now cut off the daily supply. The Iranian foreign minister says US officials are posting fake news to manipulate markets. And you're now having President Trump basically confirm that Iran is going to mine, or has been mining, the Strait of Hormuz, which would be even worse for the global economy, as now oil is completely cut off from that part of the world. That's 20% of global oil now not moving, and it is now built up, and the infrastructure can't take anymore. You can't get it out. You can't move it. And now, the G7 might go into reserves here. They have about 1.2 billion barrels of reserve oil. 400 million barrels will buy you 20 days. The entire reserve is only worth 60 days completely. And if the G7 countries went through that complete reserve, it would be an unprecedented energy crisis. As we go through all of this, crypto, Bitcoin, XRP, Ethereum is green today, as volatility rises in the stock market and in the oil market. People are looking at crypto at maybe a safe haven for some of their assets here. How will this play out? I will keep you up to date. If you got any value from this update, please support it with a like, and if you have a comment about any of this, please let me know. I really appreciate you, and I will continue to bring these daily updates because I know a lot of you are finding value here to understand what's going on, and I'm learning a lot too, so thank you. All right, I'll see you.